really the basics. We look after and manage investments for both trusts and individuals, and I just wanted to say that really there isn't a lot of difference between any trust or individual. All of them have got, as trustees, you've got assets, you've got income coming in, you've got expenditure, and you've got investment goals, and that's the same whether you're an individual or a trust. Having said that, I'm going to make a sort of generalisation here at the start and say that I would broadly divide charities up into two camps. Those that really should be thinking about long-term investment of funds, and those that really shouldn't be, either because you're sort of say, not living hand in hand. Diversification in a minute. And you must take advice from someone who is experienced, unless you have good reasons for not doing so. Other things you must do are to keep the investments that you have made under review to make sure that they are still suitable. And we would say really you should, trustees should have review meetings to discuss investments really at least once a year, I think, wouldn't we, Karen? Is that right? Yeah. So diversification and why it is important. For those of you that don't know, the FTSE 100 index is the leading index in the UK. It measures the performance of the top 100 companies that are quoted on the London Exchange, and you can see it's been quite a roller coaster ride. That's over a 20-year period. If you had decided in December 1999 to commit 100% of your money to the stock market, then you would have been pretty sad in March 2003, because you would have been looking at a 45% reduction in the value of your portfolio. But had you held on for another 3 years, you might have been feeling a bit happier again. Only to be feeling very despondent back in March 2009. So, I mean, that shows the volatility of one asset class, which essentially is just the index of leading companies. This is basically blending the 50% in stock market-based investments with 50% in returns, nearly minus 50 in 1931, and over 50% in 1954. And that's why people will say to you, you should only consider investing in the stock market if you can take a long-term view. It's not a place to be to sort of park your money for 1 year or 2 years. But what this chart actually shows you is that although you get some extreme years, you actually, most of the returns are sort of clustered around this area here. And you might say to me, well, that's all well and good, that's history, that's over the last 100. Appropriate for you to consider investing in funds for the longer term. If it is, we can help you with an investment policy. We can advise you. If it's appropriate, we can actually manage investments on your behalf, and obviously we will do the sort of necessary reporting to you as well. I think I've got exactly 30 minutes. You're very impressed, aren't you? Because Karen is really worried.
To talk about investments.
So I'm sorry, it was a real whirlwind trip, and there was sort of too much in there really to cover in 30 minutes. But I'm happy to either to take questions now or afterwards, or.
One quick one, please. Looking for cash deposits.
Yes.
One chance a year generally. These are the accounts that go into the Charity Commission. The words are as important as the numbers. Don't forget that your accounts. You may well have an external accountant. More often than not, we prepare lots of accounts for lots of trustees. What we try to do is to get them to engage. Otherwise, there are words, not theirs, and we may not get the right message across. And the trustees' report is often the area where the most mistakes occur. That's your document. That's how you get your message over. Some basic errors that you see within the trustees report. Statement of financial activity, it's a profit and loss. It's got turnover, it's got
0.7 billion is the cost to employers to operate PAYE to collect the tax paid over to the revenue on an annual basis. 1 billion is spent a year on HMRC administration and 5 billion on benefit fraud. So you can see clearly what numbers we're trying to target. So RTI real-time information, this is where employers have to tell the revenue on or before every time you pay an employee. Okay? So that's not, using your example, so it's not the 19th of the month following, it's on or before making that, so it's when you do the payroll.